Hello and welcome back to another exercise in which we're going to look at credit sales. So these transactions relate to accounts receivable, which obviously means we have credit sales. So let's kind of first go through the exercise and then see what we need to do. So we have the following events that have occurred for the Underwood Corporation during 2021 and 2022, the first 2 years of operations. So we've started our business, which means some accounts will have zero balance as we get started. Nothing to worry. We're going to see how to deal with that. They've asked us to record the transactions in the journal and then post them into the T accounts. We have only select T accounts we're concerned with and calculate the net accounts receivable. So let's take a look at what we have over here. On June 12th, 2021, we provided services on account for $41,000. So I'll start out by writing my date over here. On June 12th, 2021, this is a credit transaction because I see the word on account, which means I debit accounts receivable, indicating they will pay me the money later. I have provided my services, therefore I can credit service revenue. So my journal entry is accounts receivable debit 41,000 and service revenue credit for 41,000. Next, I'm told on September 17th, I received $25,000 from customers on account. So of this 41,000, I've received some of that money, which is good news for me, obviously. And that is on the 17th of September. I debit cash, 25,000 that I received. To the extent I've received this money, the customer now doesn't owe me that money, which means I have to credit or decrease accounts receivable. Accounts receivable is an asset, normal balance is debit, which means I increase with the debit. I'm crediting it in order to decrease it. So that leaves me with $25,000, 41,000 minus 25, that is what is owed to me. And I need that information because on December 31st, I'm going to do an estimate of what I think will not be collected. So let's first go ahead and have these two accounts, accounts receivable and allowance for uncollectible accounts. This is a contra asset account. We'll get to that in a second. From the first journal entry, I debit accounts receivable 41,000, which means I post that 41,000 over here on the debit side. Second journal entry, I credited accounts receivable. So on the credit side, I'm going to post that 25,000. 41,000 minus 25,000 leaves me with a balance of 16,000. I'm told that I estimate that 45% of the accounts receivable at the end of the year, that's at 16,000, will not be received. So I'm estimating 45% of accounts receivable will not be received. I'm going to do an adjusting entry. These first two are transactions, which means I dealt with an outside party. This is an adjusting entry. It's a book entry. I am saying I expect 45% of that 16,000 to go bad. So my journal entry is bad debt expense debit, allowance for uncollectible accounts credit. The amount over here is 7,200. So what you would see over here is I did 16,000. I calculated this as 16,000 times 45% to arrive at the 7,200. So make a note of this over here. I'm going to put this in a different color so we see it. 45% of accounts receivable ending balance is not going to be collected. That's the 7,200. That's the number I bring in over here. And I debit bad debt expense 7,200. The transactions, when we were doing them, we do the transactions and then we post into the ledger, into our T accounts. In this case, I first did this calculation and I plugged that number in over here. So it's really important that you see what we've done over here. Just a second over here. Let me get the correct arrow that I want. Yeah. So the 7,200, from here, I bring that number over here. Once again, we will see in the next year how that becomes significant. This year, it seems because there was no opening balance, it didn't make much of a difference, but it will be significant in the second year, and we'll see how to now do the calculations. Now, what is this allowance for uncollectible accounts? This is a contra asset account. So in my balance sheet, my receivables, I'm going to say I have this 16,000 what's left over at the end of the year. However, I'm saying that I am not confident of collecting the 7,200. What I am confident of collecting is the 8,800. Once again, what you would see over here is 7,200. That's a number from here. So accounts receivable is an asset. Allowance for uncollectible account is a contra asset. You subtract it from the asset account to arrive at the net number. This is what's presented in the balance sheet. Let's continue over here and see what happens in the next year. March 4th, 2022, we provide services for customers on account. So we're starting the next year. Again, we have a sales transaction. It's on account. So we have accounts receivable debit, service revenue credit, and it is for $56,000. That's a number I got from the information provided over here. Now, before I proceed, whatever is the ending balance over here, it's going to come down to the next year. This account continues. Same thing, the 16,000 will come down over here. So let me just highlight these numbers in a different color so that you know where they're going. Let me put this in a color that we can see where the numbers came from. These are the ending balances. Since they are balance sheet accounts, they carry over into the next year. So those are my beginning balances. Accounts receivable debit, service revenue credit. This is the first journal entry over here. I will go ahead and post it over here and have the 56,000 coming in over here. I'm concerned with only these two accounts, accounts receivable and allowance for uncollectible accounts. Let's continue over here. On May 20th, I received $10,000. So I'm going to debit cash and credit allowance for uncollectible account. Accounts receivable. Debit cash, credit accounts receivable for $10,000. So this $10,000 I posted here on the credit side for $10,000. Now I decided on July 2nd to write off the remaining amount owed from the services provided in 2021. So in 2021, I ended the year, I'm saying I had 16,000 that was owed to me. This 56,000 is the current year sales. The 10,000 that I collected was from last year's sales. So out of that 16, I collected 10. 6 is still owed to me from last year. We decided to write off that $6,000. We are saying we're not going to get it anymore. So let's see how I would do that. I write the date, July 2nd. I am writing off a receivable, which means I'm taking it off my books. In the ordinary course, you take it off your books only when you get cash. But here I'm saying, I'm not getting it. I'm going to credit that account. The money that's owed to me, 6,000, I'm just taking it off my books. So if you see over here, I was owed 16, I collected 10, the remaining 6, I'm writing it off. When I write this off, since I'm using the allowance method, the account I'm going to debit is allowance for uncollectible account. I had made an allowance. Last year I had said that I think I'm not going to collect 7,200. Well, I collected some of it. 6,000 I didn't collect. So I debit the allowance for uncollectible account. So what I have done over here is I have closed the associated account. Allowance for uncollectible account is a contra asset account. It exists only in relationship with the accounts receivable account. Since I didn't get that money, I wrote off the receivable and I need to write off the allowance for uncollectible account as well. So now let me post this. I already posted the 6,000 over here. Allowance for uncollectible is debit. So let me put that number over here from this journal entry. Now let's move on to the next entry or the next transaction. On October 19th, I collected 45,000 from the current year's sales. 45,000 I got cash. I credit accounts receivable. That's 45,000. So again, Accounts receivable is credit 45,000. I put that on the credit side, 45,000. Accounts receivable is credited 45,000. Then finally, at the end of the second year, I say that again, I think 45% of the outstanding receivables will not be collected. So before I do my journal entry is going to be similar to this one over here, the adjusting entry. It's going to be bad debt expense debit, allowance for uncollectible account credit. So before I do decide on what the numbers are over here, let me first find out how much I have in receivables over here at the end of the year. So I add up the debits and I add up the credits in the accounts receivable account. I add up each of these two sides. I have 72,000 here and 61, which means my balance is 11,000. Now, of this 11,000, I'm saying I am not going to collect 45%. So my calculation over here is 4,950 is not going to be collected. 4,950 will not be collected. How much do I have in the allowance for uncollectible account? 72 minus 6. If I do my calculation over here, I'm doing a sub calculation over here. It's a subtotal. I have 1,200. I want the number to be 4,950. 4,950, I already have 1,200, which means I need only 3,750 in my journal entry. So in this journal entry, I'm going to plug the number 3,750. Once again, what we've seen over here is I will first do this calculation and then plug the number into my journal entry. Transactions, we are always doing the journal entry first, and then we post into the T accounts. When we are looking at adjusting entries, in some cases, as in the case we're looking at over here, we first see what number we want over here, what's the desired number over here, and that's the number that we're going to bring in over here. Okay, now that we've seen this, let's look at the partial balance sheet just like we did before. Accounts receivable, how much do I have left over? I have 11,000 left over. My uncollectible accounts, I have 4,950. And that leaves me with net receivables of 6,050. Okay, once again, what you're seeing over here is the number that you have over here, it came from here. Again, let's review this once again. Transactions, you always do your journal entry first, and then you post into your T account. Adjusting entries, in some cases, we need to work the T account number, the balance, and bring that number in over here, which is what we did in this case.